Focus, we have Shachindra Nath, the Vice Chairman and MD of UGRO Capital, joining us on the show. Hi, thank you so much for making time and speaking with us. It was a solid show yet again from you. The AUM is up 74%. Net disbursements continue to be quite high. Quite a bit of improvement on the, profitability front as well. But talk to us about the sustainability of all of this. Let's say, as far as AUM is concerned, what's the target for FY24?
So as I've said to you in our last quarter result as well, that we exited March, we built up our capacity in last 2.5 years. We are almost 5-year-old company. In last 2.5 years, we heavily invested into both our distribution and liability infrastructure and data technology, which drives the revolution which we are trying to bring in MSME financing in India. We exited March almost at 70% of our capacity at 550 crore a month. And we wanted to demonstrate the operating leverage. And we said that for this full year, this is the range of volume we will do for the whole year. And our AUMs would grow with no very marginal increase in OPEX, would deliver a very healthy bottom line growth. So we continue to do that. So if you look at our quarter on quarter, AUM growth is similar to what we have delivered in last quarter and what we'll deliver in next 2 quarters itself. I don't think so there will be any change. Our target continues to be in the range of, we'll try to achieve our aspirational target of 10,000 crore. Even if we are short by 400-500 crore, we are okay with that because we are very focused for the year to deliver the bottom line performance. And the fact is that I think so for now we have a large base of public market investor as well from our initial private equity investors. And because we are compared with very established players in lending industry, especially in NBFC or a fintech era, which are more than 15-20 years old. So we want to be or would like to be in the range where people compare us with established player and find us attractive.
Yeah. Right. Shachindra, just please allow me the liberty of asking you a sector-specific question as well. Because, there is so much happening in the area you are working in. Biggies in the space want to get in here and acquire businesses as well. Earlier, it was Kotak Bank, which acquired a UP-based high-growth NBFC, servicing the lower end. I mean, I'm not getting into how to really differentiate it, but largely the lower end of the corporate India. Now, AU also wants to acquire it, South India. And you have been doing this, business servicing the same kind of clients for a very long time. How are the tailwinds and why is the attraction for, that people are going ahead and paying almost over 2 times book to acquire this business? Building it would take time or what?
Well, the examples which you have quoted are very different. Kotak had acquired a microfinance company versus AU is expanding its geographical footprint by merging with another SFB. But if you look at the broader commentary, all of the large players in the NBFC space are also saying that they would like to grow MSME financing now. The reason if you look at last 2 decades, we have seen emergence of a very large consumer finance business like Bajaj. We have seen a second-hand truck finance business like Shriram Finance. We have seen multiple vehicle or wheels businesses like Sundaram, the Chola, the Mahindras of the world. And it is now very clear that this decade and probably more actually belong to small business financing. The credit gap is 85 trillion rupees, and of which our addressable customer segment. So we focus on 25 lakh turnover to 15 crore turnover. That constitutes almost 96% of the gap of the credit market for MSME financing. Since the advent of the GST, the banking, the bureau, and the data set, what we call India Stack 2, it is now possible to build a large institution around MSME financing. So everyone else is also trying, but I think so we have a head start of almost 5 years. As a new entrant into the market, we have an ability to innovate faster, build data and technology, and look at the credit for MSME financing from a completely different data lens angle. Something similar to what has happened in consumer financing in 2008 to 2010. And given the market is very large, I think so most of people would start. But I think so we are at a path where we say that we would like to be the India's largest small business financing company, purely focused on this segment. And we feel very, very inspired with the opportunity in front of us and what we can do for the nation. We keep saying India belongs to Bharat. Bharat belongs to small businesses. So multiple socio-economic fabric of this country actually is linked to the growth of MSME, the employment, the way our infrastructure will get developed, so on and so forth.
Clearly, in fact, even Mr. Nelekani in a recent commentary presentation did speak about what data is doing for availing credit at the lower end of the MSME, etc., and the size of opportunity. But I want to understand, you are sticking to your AUM target of 10,000 crore by 24 end. We are almost there. You have already crossed 7,200. Have you put a number in place for the next year, for 25?
I'm now being constantly advised that I should not put out such hard numbers, which we will deliver. But I always try to. We put these numbers out for our own aspiration than anybody else. We have said long back that we would like to be a very large player, and that very large definition for us is anything between 17 to 20,000 odd crore. The way our business is evolving, I think so by March this year, most of our distribution channel will mature to fullest, and we should be exiting the March at 750 odd crore. We are now entering 3 more states for micro enterprises business. We are rolling out 75 branches in next 2 quarters. That would add to the incremental, micro enterprises footprint and also customer base. We are adding large number of retailers in our supply chain financing. We are adding large number of small shopkeepers through our GrowX platform. So we continue to believe that we should be next year in the range of this, 17 to 20,000 odd crore. As we go near to the year end, I think so we'll be able to give you very clear guidance. So I think so we wanted to prove that UGRO has the capability to build a large institution. I think so to some extent we have demonstrated that. Now we want to grow on a sustainable basis. We want to deliver strong, comparable profitability vis-a-vis other players, so that capital, which is the raw material for us, is always attracted towards us, so that we can actually, our aspiration to build a 50,000 crore business in next few years and be the largest in this segment of the market can get achieved. And that's a function of delivering sustainable performance. If you look at our quarterly results, we have said in last quarter itself that post 2025, we would like to consistently grow at 30%. We would like our income to OPEX ratio below 45%. We have built this off-balance sheet business, which is very unique through co-lending. We would like that to be at 50%. And we would like to deliver a 4% return on asset and 16 to 18% of return on equity. And once you deliver and consistently perform on that, you're a top-tier lending institution in India.
Oh, well, yes, and you've managed to deliver at least on the targets you had set for yourself so far, and I'm sure over the next 15 months we'll see further of those targets being met. Thanks so much for making time and speaking with us. Good to have you on the show. But on that note, slipping into a very short break, don't go anywhere.